Well, Bloomberg News has learned that Dubai's sovereign wealth fund has quit making investments and it may sell off some of its assets. The fund, Istithmar World, has spent more than $25 billion in luxury properties and companies such as Barney's New York. Bloomberg's Jonathan Keener joins us now to discuss the implications of this fund being halted. The sovereign wealth fund story really dominated the past 2 years. Now we're talking about Istithmar disappearing? Is that what you're saying?
That's right. And Istithmar, as you know, was really the flagship fund of Dubai, which really was the flagship of all the sovereign wealth funds. They were out making headlines on a near daily basis, buying properties, as you said, like Barney's, joint venture with MGM Mirage in Las Vegas, the City Center, which will be the largest property on the Strip, just all over the world, big luxury items. What we've learned is that they've stopped making investments and that the fund may be unwound. Yes, the assets may be sold off, the whole fund portfolio may be sold. All of this to help Dubai with its debt burden, which is towering now at about $80 billion, the excess of all of these property that they've been developing out there.
How'd they get in this position? I mean, is it the domestic story there with the real estate bubble having burst, or is there something else here with the debt levels they took on?
It's really a confluence of both. I mean, what you have is an emirate that was trying to define itself as sort of the Hong Kong or Singapore of the Middle East. They were out buying luxury properties, trying to bring in consumers. They were out buying financial properties, trying to make themselves a financial hub of the Middle East. As you know, those are two areas that have just been slammed by the credit crunch. So you had that. You also had just a highly leveraged fund. This wasn't your average fund that was out buying treasuries and very liquid securities. It's very illiquid, 80% in private equity and real estate alone. You just can't sell these assets. So, yeah, they're in quite a bit of trouble.
So what's next in the immediate term? What happens to David Jackson's at the helm there?
He is at the helm. What we reported this morning is that his job is under review. The joint CIOs based here in New York were announced they were leaving this week. So clearly some management changes. There's been a number of advisory firms that have been brought in to help them restructure. What you have fundamentally is a tribal system over there at the moment. I mean, there really aren't the risk controls that we're used to here, which serve Wall Street so well.
Well, there isn't the infrastructure. The money's very new.
Exactly. It's new and it's relatively unsophisticated. And what we've been told by the advisors is they're coming in and just trying to streamline the place, trying to bring in proper asset allocation, trying to bring in risk controls. And that means diversifying away from this high luxury good, a lot of these financial properties that they've been accumulating.
What does it mean for some of the assets that they own here, like Barney's?
Barney's being a big question for sure. City Center being another one. That's the largest project in Nevada. I think if I was a creditor in either of those, I'd be very concerned, and we've heard as much. Barney's will, we believe, be restructured in some way, potentially facing a bankruptcy in the fourth quarter or the first quarter of this year. So
you had said Holt Renfrew in the running there.
Yes, last week we reported Holt Renfrew may be making a joint bid with Perry Capital, one of the creditors.
All right. Thank you so much for
Thanks
giving us that update, and we're going to continue to follow this story as it develops.